You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean only one thing. It is Friday. It is noon Central, 1 p.m. Eastern. It is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which so many of you have been binging throughout the week. Glad to see you're enjoying the program. Remember, if you like what you hear, keep those reviews coming so the wave, the tidal rush of newcomers to the world of options can have a place to go. Maybe not quite to Volatility Views. This might be a little bit next level for them, but certainly for the rest of our shows on our network that are more educationally oriented, certainly OPR, Options Bootcamp, and even the strategy block segment of the option block and stuff like that. They can usually wrap their heads around those. If you like what you hear, keep those reviews coming in your platform of choice. More important than ever in these troubled times. But keep those questions coming too. We do love to hear from you guys out there. And let's see who we're hearing from on the old program today. First, joining us, holding down the MIAX hot seat, our old friend, the Oracle of New Hampshire himself, and it seemed like for a while there, the Oracle of the 2020 election, Mr. Matt Amberson, the founder of ORATS, a.k.a. Options Research and Technology Services, a.k.a. that guy dancing in the ZZ Top Sharp Dress Man video. Mr. ORATS Man, welcome back to the program, sir.
I was robbed, Mark.
So sounds like I was going to ask you if you have recovered from our epic spectacular. It sounds like you're still down in the dumps because your prediction came oh so close to pass, sir, and then it seems like it's not heading that way now.
Yeah, well, you know, I'm chalking it up to voter fraud. I can't take a loss very well.
Hey, our guest on the newly minted Matrix hot seat last week on the program, he's from the UK, and he said, because we talked about on the special, of course, the betting sites were trending over 80% for Trump at one point during the night there on election night, and betting sites were actually paying out in the UK on Trump. So if you cash your ticket early, Matt, you should have cashed your ticket early. I've always said, if you got a winner in hand, get to the window before they change their mind. And so they actually paid out on Trump in the UK there early on. So you had a window, Matt. You had it. and you let it slip away, sir.
It's not over till it's over.
That's true. Not over until what you call him, the orange guy, until the orange guy sings.
Yeah, the orange guy sings.
All right. And also joining us, like I just mentioned, in the newly christened, the newly minted Matrix Executions hot seat. So new, it's not even in the intro yet. We'll get him rotated in there very shortly, as our old friend, the rockingest of lobsters himself, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of Carmen Line Capital. Mr. GIOVINAZZI, welcome back to the program. And how's that shiny new seat fit? You know, you gotta wear it in a little bit, make it comfortable. How's it feel, sir?
Oh, you mean Tubby's Matrix seat?
Yes, the Matrix hot seat.
You know, there's plenty of room in it. Let's put it that way. There's plenty of room in it. Although I just went to the doctor and my almost 6'4" frame is 250 pounds, so I can no longer. I have to do something, or I will start to become much larger than I want to be.
We all have a little Tubby in our lives as we head right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the program where we break down all the vol going on this week out there and all the products you like to trade, and maybe some ones you don't really know much about and you want to hear about more. And maybe because we have Matt on this week, maybe we'll dive a little bit more into all the fun single name vol lighting it up out there this week. But let's start in the land of the vol products. By the way, towards the end of the week here, we're seeing a color you guys are probably familiar with again out there on the screen. A lot of green on the screens to end the week after a session or so of red, a little bit of relaxing from the endless rally that is mostly 2020, which sounds strange to say out loud, but that is pretty much what we've seen. And most of the major indices up north, well over 1%. In the case of the S&P, it's up about exactly 1%. The Dow up about 1.1%. NASDAQ actually the laggard today, only up about 0.75%. And our old friend Spikes at about a 23.75 to kick off the show. That puts it down about 2.5 handles from where it was this time last week. VIX Cash was at about almost 23 even coming into showtime. Puts it down about 2 3/4 points from this time last week. And our old friend VVIX, a.k.a. the volatility of volatility, at about almost a 116, about 115 3/4. Puts it actually up a little bit, up about 2 1/4 points from last show. Remember, VVIX doesn't have to go down just because vol goes down. We also changes in vol, what we're looking for there. And so the volatility of volatility actually ticking up a little bit. You know what else is ticking up? Before we get to Matt out there in the MIAX hot seat, their numbers just came out for October, and they had yet another good month over there in MIAX land. Group market share. I mean, that's the MIAX exchange group. Remember, that's MIAX options and MIAX Pearl and Emerald and all the other fun stuff going on over there under the MIAX umbrella. If you're curious how much stuff they have going on, check out my interview with their CEO, Tom Gallagher, from a few weeks back on our Options Insider radio program. All kinds of stuff. Diamond contracts, crypto, international equities, you name it. A lot of fun stuff cooking over there. But they executed 73.3 million equity options contracts in October. That gave them a total U.S. equity options market share of about 12.25%. Their numbers from this year are up about 21% from this time last year in terms of market share, which is kind of, I know, obtuse, a percent of a percent. And so a good time here for overall, in terms of overall market share. In terms of overall volumes, up even more than that. They did 41.7 million contracts last October, 73.3 million. This is up about 75.5%. So year over year, MIAX putting up the numbers out there. So a lot of stuff trading out there in MIAX land, which we're glad to see. Of course, the whole options industry is rocking and rolling these days. Not exactly for the reasons anyone wanted, but still, the numbers don't lie out there. You know what else doesn't lie? It is the Oracle of New Hampshire. So, Mr. Matt, I'm glad to see that you are maybe somewhat recovered from your bitterness from the election. Before we get into all the fun earnings stuff, what's lighting up your tape out there now in this week or so since our big election night special? A week or so since the big election, we saw the rally heading in. We saw the vol crush. We've seen the endless rally pretty much since the election. What's been lighting up your tape in this intervening week and change, sir?
Well, it's the waking up of the small caps that's been lighting up my tape. It looked like the NASDAQ whale has now chosen to be the Russell whale. And the way out of the money calls, the 5 delta calls that we used to love on the floor, were bought up so precipitously that the rally that happened, the big rally that happened on the 9th of this month, saw incredible buying, and we saw one of the highest ratios of the 5 delta to 75 delta, and then that led the Russell to have the largest gap between itself and NASDAQ. It was like 5% in one day outperformance, which was a record. So it seems like the NASDAQ whale has shifted to the Russell whale and buying those calls. And we still see, especially what we run at ORATS, is the component-weighted volatilities at each delta and each constant maturity. So it's the 30-day 5 delta is in the components is as high as we've seen it. So they're getting out there in the small caps and buying a bunch of calls, and we think that is what's leading quite a bit. There's quite a bit of a rotation, out of tech maybe into value too. We see that, and but the big thing is the Russell, the small caps, and then I have a question. I was looking at the VIX and its relationship to maybe Andrew could help me out here. The VIX percentage of the implied volatility of the 30-day, so of the SPY, for example, or SPX, that seems to be getting high, and what I've noticed is I've graphed that, and it spiked on 8/31, so August 31st. It was very high, 41% above the SPY, and it got up to quite a bit above the SPY, not too long ago. We're up about 25% above the SPY right now. I wonder if anyone has any thoughts on why that can be. Why does I know that the VIX, it uses a lot more of the calls and out of the money stuff. Does that mean the out of the monies are getting priced higher? I don't know if you guys have any if I could ask a question.
I want to get to that in 1 second. I want to go back really quickly first to what you just talked about, because that kind of resonated with me, is your small cap, what's been going on in small caps, because I noted you had a big write-up about that, and that kind of surprised me because I haven't seen you really talking about small caps that much before. I know we talk about them a lot every week on our TWIFO program, This Week in Futures Options, but small caps seem to have been left out a lot of the analysis, and certainly a lot of the big, well, not the big moves, because small caps have been moving quite a bit, but a lot of this protracted rally, some small caps haven't always participated in. That's been held out, a lot of people have said, as a sign of the weakness of the economy beyond your traditional big 5 or so out there that everyone talks about, the FANG names, the tech names, all the names that have been dominating the headlines and dominating the rallies out there. Of course, if you listen to our option blog program, you know that a lot of those second tier names we talk about have peaked at June 8th and haven't really recovered since then. That's kind of been some of the case for the lingering malaise out there in small caps. And now all of a sudden they're on fire. I know you were talking about them. I know Brian on his OPR program, kind of out of the blue, did a big Russell 2000 backspread as well. So seems like suddenly, Matt, everyone is awakening to what's cooking out there in Russell 2000. Was that just a scan you ran and you noticed that and you decided to dive in? What brought your attention over there to Russell land, sir?
Yeah, I mean, they've been asleep for so long, and just not much has been going on. You're right, we do a lot of these scans, and the Russell has been, just kind of following, in the footsteps of NASDAQ mostly. And, this was a pretty incredible standout performance of it, back on that huge, I think it was one of the largest volume days that we've seen. And it was really driven by Russell. It's that morning when Pfizer announced that they had the vaccine going, and wow, that the future was locked. The Russell future was locked. So a lot of things happened to really draw our eyes towards the Russell. And since then we've seen maybe the other way out of the money calls in NASDAQ come down, whereas the Russell is still kicking up there. So I think it's going to be around for a while, Mark.
Yeah, it certainly does. I didn't mean to hijack your question. It just kind of, you resonated with me, what you're saying out there about small caps, because it has been a fascinating thing to watch. We've been analyzing the options paper, most of it on CME. We haven't had a chance to really parse what's been going on in some of the big, ETFs out there like IWM, which I know a lot of you like to play in as well. But we have seen interesting pockets of liquidity out there on the CME Russell 2000 options. Mostly, it seems like, ironically enough, in far out of the money puts. That's kind of been the order of the day since those products really listed. Size paper going up in the pretty far out and pretty far out of the money puts. And that's kind of been like clockwork week after week. I'm not sure why that is. Maybe it's just a unique pocket that only exists at CME versus not at its bigger volume cousin over there, the IWM. But interesting stuff nonetheless. But Mr. Rock Lobster, I have hijacked you too long already, sir. So, if you have any thoughts about what Matt was just talking about here with kind of this just surprising, maybe not surprising, maybe just it waited its time and now its time is upon us, but this small cap volatility resurgence, if that occurred to you as well, if that came across your radar, if you have any thoughts there, A, and then B, if you have any comments on what Matt just asked you, have at it, and then C, what the heck has Volman been up to this week, sir?
I feel like it's almost a test of how old I am to see if I can remember all the questions.
Yeah, we're testing your mental acuity right now, sir.
Yes, I know. So as far as the small caps, yeah, it is astounding, and I'm actually seeing them move. So I have a lot of mineral stocks and stuff like that on my list that are starting to flutter a little bit. I haven't looked at a lot of the upside, but I am starting to see just overall just vols, like S&P 500 vol, like for instance, it's about like the 30-day vol is getting close to what we had right before we had that big September run-up when everybody was feeling really good again about the virus. What I would say there is, relative to the number of cases per day, this is not we have kind of like an inverse correlation where we have high number of cases and low vol, which we haven't had this year. Normally when our cases were spiking, vol was spiking because everybody's freaking out. And I would just notice that this time that's not happening, right? So we have a high case count and we have lower vol, just for as of today anyway. With VIX down almost 2 handles today. The second part, so the small cap thing, yeah, because I do have a lot of like those Russellies, I have like, I don't know, maybe 30% tech in like my, retirement account stocks and stuff like that. But a lot of it was in value because they were so cheap. And that part of the account is finally going up. Nothing close to where the tech is done this year, but at least it's moving along. So I haven't noticed the call buying per se yet, but now I'm going to look for it. As far as Matt's question on the VIX, so were you talking about why the VIX was higher than the 30-day vol? Is that what you're asking?
It's that ratio. Like I was just looking at, is that even meaningful to look at? But that ratio between the VIX, and I just had the cash here, but it's obviously more pronounced in the futures. But the VIX cash divided by the implied volatility of the 30-day is pretty high right now. I was wondering, what is that?
Yeah, I think that is because, again, if you're looking at your 30-day vol, if you're looking just at the money, so because VIX does pick up everything with a bid. So if there's a bit more bid to the calls than normal, then VIX is going to be higher. So yeah, VIX does. So VIX will pick up anything that's a little bit more sensitive because it's picking on everything. What I thought at least earlier in the week, I saw kind of actually a flatter. I don't know, maybe things have changed since then, but I thought I saw like higher Yeah, you're right. The tails were bid more than the at the money because I couldn't find any flies that priced. They actually, all the butterflies that I like to do were priced horribly, meaning the stuff I had to buy on the outside so I could sell anything near the money, the prices were crap. So that would go basically just confirm what you said. There wasn't a lot of good fly trading because the tail ball was too high. So that I think, but that kind of comes and goes relative to, have I seen it this high before? I'd have to look. The percentiles were pretty high, but they weren't crazy. But that's why, just because VIX picks up every contract, Matt. So, yeah, I think it is because the tails will wiggle the value of VIX a little higher up if they're more pumped. So it's hard because normally you don't see the calls adding to that, but I think the calls were adding. And I think that's a big, I don't think it's coming from the put side as much as from the call side. Because, okay, if we do have this virus cure, all of a sudden, there seems to put a tunnel around the coronavirus problem. If they can distribute, vaccine in 6 months, distributing a vaccine in 6 months because they know it works is a lot different than last year when we didn't know how to treat it. A bunch of people were dying, because we don't have near the deaths we had six months ago in March. So, doctors have figured it out. So I think the vol's just saying that the upside is actually a thing now. And that, I think it actually pretends, I think that curve is coming from calls, not as much as puts. And that could be bullish, actually, even with the vol where it is. So, and then the last question, I can't even remember what the third question is. What is Volman doing? Actually just trading back spreads. That's what he's been doing. At least vol back spreads, just equity back spreads. It's just juice, I think, for a lot of individual names has been underpriced, and it's been making money. So I want to go to a place that's making money. Vol was a good trade, and I closed most of my vol puts at the beginning of the week, end of last week, and beginning of this week, because it was just such a crazy surprise with the Pfizer announcement. But now we're setting up to, if we close today here, we will have closed in zone 3. And I don't think we've closed in zone 3 for more than 3 days in a row in about 6 months since we had that kind of going into the June and everybody was starting to feel good again. So it'll be interesting to see if we can do that because this is the inflection area. So I think I answered the 3 questions and now my head hurts, so I have to stop thinking.
Yes, you passed your senility test, at least for the near future. So tell your doctor. You're still mentally capable out here. You know what else is proving capable, or at the very least interesting out there this cycle? Our earnings. I know sometimes it's hard to focus on the individual names when there's so much hashtag macro madness going on out there. Of course, the election, the post-election rally, the now this week post-vaccine announcement. We don't really have a vaccine yet, but a post-vaccine announcement rally and all the other madness that's going on out there. Do we have a president? Do we not? All these things seem to be just sucking up all the oxygen in the room, but there is a hot and heavy earnings season going on out there this week. Some big names popping off this week as well. Monday, we have McDonald's, Canopy Growth, and Beyond Meat. Tuesday, Lyft, Rocket Companies, the parent of Rocket Mortgage, one of the big IPOs of the year. IPO'd back in August as well. Last night after the bell, big ones like Disney. A lot of people were looking at that one. Of course, a lot of their parks are still closed. ESPN having issues with no live sports. They haven't released a movie in, a year. So a lot of stuff out there that had been weighing on Disney. A lot of people were watching on that one. Cisco, AMAT, a perennial top tenor. Today we have DraftKings. So who better to have on the program with us this week than the guy who's the keeper of all that cool earnings data, the earnings move results, and indeed the earnings season reports. Mr. Matt, sir, a lot has been popping off this week, and indeed this season. What's been catching your eye? And do you have any last-minute results reports from some of the big names popping off last week you want to throw, or I should say last night, you want to throw into the mixer? Have at it.
Thank you. So again, I sound like a broken record, but the option holders, the people that are long the straddles, have been getting hurt this season. Happened last season too. We've been surmising that, I don't know, earnings is not as important in with all this other stuff going on. And still, the implied earnings effects were pretty high. We're now in week 5 of the 6-week earnings season that we break down every earnings season here at ORATS. Usually, we'll see, about 40% win rate and actual implied about 100%. So people are kind of breaking even on the overall. But now we're down at 70%. So they're really getting hurt this year or this season. In the straddle owners are. This week is the only one that's been profitable, actually. So you pointed out a few of the names that have been called out this week for earnings, and they've actually been moving enough to give some hope to these option buyers. Now, just on some individual names coming up, let's just go for that. We have Home Depot is kind of interesting to me because the past earnings move have averaged about $4.65, and the straddle is implying a $7.79 move. So that's one of the bigger ones. And Lowe's is kind of the opposite. $8 is implied, and it's moved around $8, a little over $8. But I've been looking at some Home Depot, and it's the straddles looks pretty high to me. We got some more Target's coming out. Some of the retailers into it. HP Workday next week's going to be a real interesting one. We had last night last night we had Cisco report. They moved 6.5% when they were implied at 5.5%. But then, there were only 2 winners and 7 in the red. If you look at what was implied versus what actually happened, you mentioned Disney. Disney moved 1.4%. They were implied at 4%. So that hurt the option holders there. And that's kind of a broken record. We've been seeing a lot of moves that have been less than implied. And again, we're thinking that, just a lot of the Robin Hooders and a lot of people are looking at macro events and not really at the earnings. When are they going to focus on earnings? I don't know. Next season, it's hard to tell. But if you look at the VIX skew, I mean, it's in backwardation in the front, but the highest one is the January. So that's right around the next earnings. So I'm wondering if next January's earnings is going to be off the charts. And it seems like after getting bloodied this season, that they might bring down the implied. So it might be a chance for option buyers next time, Mark. It's the old story.
You got to wait till January. January is when they're going to start taking earnings seriously again. Because you're right, for the entirety of 2020, it's kind of just been shrug the shoulders, crush the vol. And if you were selling vol, we hate to advocate one way or the other on earnings season, because we've said many times here, the data bears it out. It's pretty much a crapshoot out there. But definitely this year, as you mentioned, earnings buyers and vol buyers have not fared well. I'm looking at your earnings season. It's hard to believe we're in week 5 already. It seems like earnings season just started, Matt, but apparently, according to your data, we're in week 5, so I'll take your word for it, sir. Coming into week 5, you're right, it has been a bit of a bloodbath. By the way, you guys can see all this stuff for yourself, the earnings move results, and the earnings season reports over there at theoptionsinsider.com. Click on the Options News and Articles tab, and you're off to the races with all this stuff. And you can't beat the price. It's free. If you're trading this stuff, you really need to be paying attention to these names because, hey, they do tend to move markets. Maybe not all the time in 2020. But outside of that, in normal scenarios, big earnings reports usually have a tendency to move markets. And so far, it seems like on the earnings season report, only week 5 is outperforming from an overall how much vol was priced in versus how much bang was delivered for the buck out there. Listen, week 5 is at 109% so far. Every other week. Last week, week 4, 87%. Week 3 and week 2 both tied at 56%. That's kind of interesting. And week 1, 67%. So weeks 1 through 3 in the red. Week 4, pretty much in the red. And week 5, actually in the green. Still net on the season, the average is 71%. So looking kind of blood red out there for volatility buyers yet again, at least when it comes to earnings. Mr. Rock Lobster, I know you guys mostly focus on large-scale index vol, but have any of these big names that have popped off, and a lot of them have any of these come across your radar in the pit chat? Any of your crazes in the pit land trading these, sir?
I mean, we don't do a lot of pre-earnings. We do like into earnings, but not usually through earnings. So I have to say that not a bunch. I had a little bit, something a little on a rocket, not much, but as far as Disney goes, all we've had has been like, we were seller puts a while ago, and that was about it. But that was, I mean, long gone ago. Like, you could sell 80 or 70 puts or 50 puts or something like that. So it hasn't been very interesting since then. Because it's just running. So that's the short answer there.
Speaking of Disney, who'd imagine in a year where effectively the good chunk of the parks, at least on the West Coast, are closed. And then, of course, they haven't put out a movie in the better part of the year. And ESPN's having issues. There's no live sports. And a lot of the other arms of the Disney media empire are kind of languishing. They had Disney Plus. It's got a lot of subscribers. There hasn't really been new content. There's Mandalorian a year ago and kind of Mandalorian now. That's really about it. Yeah, apparently the stock looking good, up 214 right now, up 1.5%. It's trading 137.5, so it's roughly a third higher. It was flirting with that 100 handle not too long ago, back earlier in the year there, listeners. So it's had a good rally in spite of the fact that most of the arms of the Disney empire are not really firing right now, or if they are, they're kind of only firing at half speed. Let's see if the VIX futures are firing at full speed. Spikes futures, of course, not firing at all. They're still halted. We're still waiting for those bad boys to come back. But talking to Tom over there a couple of weeks ago on our Options Insider radio program, he sounded pretty optimistic that we will see Spikes futures back before the end of the year. So those of you out there who are trying to fight your way in to trade some Spikes options, there is a future coming its way back at you. So stay tuned out there. VIX futures land coming into showtime. So this is obviously a little bit back now. Here we saw the no future. Everything looked pretty much almost about exactly the same as it was about this time last week, with the exception of the no future. It's a little bit higher. It's about almost half a handle higher to the cash than it was this time last week. But of course, that no future, not long for the world here. So D's future about 1.8 points premium to the cash coming into showtime. That's pretty much exactly maybe a tenth of a point higher than it was this time last week. Exact same story for the Jan future, about 1.8 point premium to the cash coming into showtime. Almost exactly where it was this time last week as well, about a tenth of a point. So not a lot changing on the little bit farther out portion of the curve here, at least coming into showtime. Mr. Rock Lobster, is that your takeaway as well?
I don't. That's a good one about this time last week. So what I would say is, relative to cash, there is actually more juice in the future now. It's starting to resemble what I would call a more normal curve, where the forward vol numbers in the back are higher, and vol in the front is lower. So you're starting to, the curve shape is starting to switch where the market is looking for a little bit lower vol in the short term, which is kind of hard to believe, but that's what it looks like. So you've got higher vol in the back and lower vol in the front, which is usually just an indication of less realized vol expected. So if anything, that would be just, volatility is settling down a little bit. And I think there's two big reasons. One is, if there's a runoff in January that's significant, we got to wait a month. The count is still ongoing. It'll be at least another week or 2 weeks. That could be less vol. And the market is not freaking out yet about the COVID cases. So I know it's hard to believe we're at this high level, at least for right now. The curve is showing it's expecting less short-term movement. So I think significantly different than it was last week. It was much flatter right after we had that, or, just after the election, there was a little bit of relief, but the curve was still sort of flattish, I would say. So first time we have seen this curve shape in at least a few weeks, as much as I can remember.
Let's see what we're seeing out there on the vol options front as well. Spikes options, folks still clawing their way out there on the retail side, trying to get some paper done out there in Spikes land. The top positions looking pretty similar to what they were this time last week. I'll start with number 5. Number 5, the NOV 50 puts. Remember, there's some interesting meaty strikes going up out there in Spikes. We've kind of pontificated on this a few times now on the show. Interesting strike selection. NOV 50 puts, like we mentioned, coming into Showtime. Well, as of right now, let's see, Spikes is at about a 23.88. So those are fairly in the money puts. Number 5, number 4, the NOV 23 calls. That's pretty much our only at the money strike trading out here. Number 3, we got the D75 puts. So very beefy. Some might say meefy puts out there if the meatball was here. Number 2, we've got the NOV 47 half puts, so also very meaty. And number 1, we got the Feb 11 calls, also pretty meefy out there. So yeah, these are interesting strikes. They persist. People like trading deep strikes out there. I think some of this obviously has to do with the fact that there is no future, so maybe a little bit of replicating it on that side, but still, just interesting strike selection nonetheless. Heading on out to VIX options land. Not a heck of a lot out there that's very interesting, at least today, from an overall VIX options perspective. In fact, as of a minute ago, almost exactly 250,000 contracts on the tape, 248,000 to be precise. The big prints. Before we get to the big prints out there today, let's get to what's dominating the open interest out there in VIX options land. It's kind of been an interesting talking point now on the show for the last couple of weeks. You know, when are we going to start seeing some calls trickle into the top 10 out there in VIX land? If you were waiting for that day, listeners, keep waiting. Today is not that day. Only one call yet again in the top 10 out there in VIX options land today. Cost you $142,000 to break into the top 10. It's a little more respectable than we have seen in the past. That gets you all the way to the NOV 22 puts. Number 9, $1.47 of the D's 25 puts. Number 8, also $1.47 of our first and only call in the top 10. That would be the NOV 65 calls. Then number 7, also $1.47 of the D's 21 puts. Number 6, $1.52 of the NOV 21 puts. Number 5, $1.59 of the NOV 25 puts. Number 4, $1.65 of the March, the first and only March on our list, 17 puts. Number 3, 171,000 of the D's 22 puts. Numero dos here, 231,000 of the D's 23 puts. And you can probably guess what number 1 is. Pretty much exactly 250,000 of the D's 20 puts out there. Total of about 8.25 million contracts open. So starting to tick up from an OI perspective. About 3.75 million on the calls and 4.5 million on the puts. So not only are puts outpacing calls in the top 10, but in the OI as well. 4.5 million worth of contracts out there on the put side, only 3.75 million on the call side out there. So a lot of paper on the put side right now out there in VIX. You thought that might start to mitigate as we've seen some of this vol come in, but not so much out there today. We said about 250,000 contracts on the tape today. The big prints out there, about 22,000 of the NOV 22 puts, 14,000, almost 15,000 of the D70 calls. 70 again. That's an interesting strike. Number 3, 13,000 of the D's 22 puts. Number 4, 12,000 of the February 90 calls. Those are interesting. Those are trading, by the way, if you're wondering, at a 126.5 implied volatility. And the D70 is 179.5. Those are some interesting levels out there. Number 5, we got the NOV 24 puts with about 11,000. Yesterday, a little bit more active, 471,000 contracts on the tape. The most active contracts among them, the top 5 out there, the D's 22 puts with 41,000. The NOV 22 puts with about 40,000. Looks like a bit of a roll going on out there. The NOV 23 puts, 31,000. The NOV 25 puts for 24,000. And 22,000 of the NOV 24 puts round out our top 5. Wednesday, a little bit more paper. Again, 560,000. The top 5 most active out there. The NOV 22 puts with 35,000. The D's 23 puts with 33,000. The D's 25 puts with 24,000. The D's 60 calls 60 with 24K and 22,000 of the NOV 20 puts. Out to Tuesday, similar paper, 570,000 contracts. The big most active contracts out there. 55K of the D's 22 puts. 43,000 of the DEES 18 puts, 40,000 of the Feb 15 puts, 40,000 as well of the DEES 45 calls, and about 26,000 of the DEES 30 calls. And then the big day of the week, which was Monday, of course, that was coming in hot off the heels of the weekend. Everyone was just fixated on this vaccine result. The markets were off to the races. We saw 126,000 of the DEES 20 puts trading out there throughout the day. That's a pretty active contract. Number two is far away from that, only 36,000. So 90,000 contracts difference between the number one and number two, listeners. 36,000 of the NOV 24 puts, 33,000 of the NOV 21 puts, 32K of the NOV 22 puts, and round out the top five on that busiest of days there on Monday, 30,000 almost even of the NOV 50 calls. Interesting stuff mixed. By the way, those NOV 50s, 232.9 implied volatility on that strike. So interesting stuff afoot out there, Mr. Rock Lobster. A lot of interesting and some pedestrian paper going up this week in VIX options land. Anything come across your radar or the radar of your crazies that was of note, sir?
I mostly just put action. I think we might have touched on it on the show this week, but just a lot of put buying. I started buying some more DEES puts, DEES put flies and stuff like that. But yeah, I think I think we could see a kind of a low VIX number, maybe possibly in the teens. I don't know how long it will stay there. But that doesn't mean I don't have some upside calls. I'm just changing how I ratio it. So more puts to calls is probably more like 1 to 4 for me right now. But yeah, it does look like a lot of put action, and that's I think that's the reason, because we have a vaccine that apparently the president knew about, but nobody else did last week. So anyway, I think that's what it is, and that's why where all the action is.
Speaking of vaccines, didn't you love how our vaccine came out? It was 90%, and the Russians were like, nana, nana, boo-boo to you. Our vaccine is 92% effective. What a world we live in, listeners. But, Matt, I know you were talking earlier. You're kind of all in on Russell 2000 right now. But if you can peel them away from that impressive skew chart out there, anything catching your eye in the land of VIX options this week, sir?
Well, you know I love the puts in VIX, so we've been seeing a lot of that action. But the price of the puts got so high. I mean, I'm just looking at the implied volatility to the actual historical volatility. And, you know, just in the last week when I was looking at some puts, it was so high, but it's come down now. That relationship has come down. I've just been looking at, you know, what is the VIX moving at? And it's moving at about 137 for 20 days. And then the implied volatility, 120, 126. But like, you know, when I was trying to buy some puts last week, it was off the charts. I'm like, what is going on here? And so I couldn't get into my beautiful puts that I liked, and they would have done pretty well. So that's what I was seeing in the VIX, Mark.
Yeah, you sound like some of the fund managers we've had on the show and on the network of late who've been out here kind of hand-wringing about how much it costs to actually buy them their options out there, especially at times like last week when you may actually want them. You're right. They were a little bit juicy, obviously coming off a bit this week, maybe more attractive this week, but of course the use case for them has perhaps moved on. Such is the challenge of option trading. We usually hear that lament around VXX. That's the one where, you know, those puts get super juicy and they remain there for quite some time. Speaking of VXX, let's get out there right now. The product you guys love to fade. As of a few minutes ago, let's see, VXX 1915, actually ticking up. It was at 19 even coming into showtime. It still puts it down almost 2 points from our last show, 19 3/4, or I should say 1 3/4, down to 19 handle. And decent paper. Saw about almost 100,000 contracts on the tape, I should say, as of a few minutes ago. The ADV is about 238. That actually has ticked up quite a bit, about 18,000 contracts from our last show. So we have seen VXX paper steadily ticking up out there. Not a lot lighting it up out there today. The big print's about 6,000 of the NOV 19 half calls So not a lot of interesting prints lighting up. Let's look to the top 10. Actually, let's go to the top 5 so you got to get some of your questions on, too. We're kind of coming up against it. A lot of things to talk about on the show this week. Go figure. Let's do a top 5 out here really quickly in VXX land. Number 5, 23,000 of the Nove 40 calls. By the way, if you're wondering our worst Caldo game, if you had guessed number 9, you would have been correct. There actually are 1, 2, 3, 4, 5. Half of the top 10 is calls right now. So maybe back to a little bit more semblance of normalcy in VXX land. I don't know. Interesting stuff out here. Number 4, 23,700 of the Nove 16 puts. Number 3, 24K of the Nove 21 calls. Number 2, 32,000 of the Nove 30 calls. And number 1 with a bullet out there in VXX land, 59, almost 60,000 of the Jan 15 puts. I wonder if this is our friend with the old 30-22 put spread, if he's back for some size downside. He likes to play near term, likes to play out of the money. 15 sounds like it's a freaking huge way away, and yet it isn't that far away anymore. So about 1 3/4 million contracts open out there in VXX land, about 900,000 on the puts, and about 800,000 on the calls. So pretty close. The calls to puts out here. Let's skip over UVXY because we just don't have time for it, even though it is about 13 and change, about down 2 points from our last show. If you're into UVXY, check out our shows from a couple of weeks back where we had the UVXY whale on talking about why he's in or why he wanted to get out of his positions, which looks like he did. And maybe it worked out pretty well for him. As we keep on rolling, let's see how things are working out for you guys right now. It's time for your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, welcome to your segment, the Vol voicemail segment. Since we kicked it off talking about Matt still a little bit bitter about his election night prognostication going a bit astray, after he was one of the few who had the cojones to dive out there with an actual prediction and do it very early. It kind of made me wonder, especially as the week went on and we saw into last weekend how things were probably trending away from Trump and towards Biden. It made me wonder, of course, the big wild card of the year has been this pandemic. It's thrown a wrench into pretty much everything, all the best laid plans thrown aside by this pandemic. And of course, it made me wonder, take the wild card out of this. Same players, same everything else. Just take the wild card out of it. What do you guys think would have happened with the election? Do you think it still would have trended the way it is, which is Biden in the driver's seat? Or no, do you think Trump would have taken it? Or are you guys just done with all this politics stuff? And you guys overwhelmingly chose Trump winning, 56.7%, 29% for Biden still wins, and surprisingly low, only 14.3% saying you're done with politics. So that one kind of surprised me. Matt, you're our prognosticator, so I know you probably have some thoughts on that. I'll also squeeze in this question here from Firepower as well, who wants to, I like the handle, by the way, good handle, Firepower. He says, if I want to avoid the volatility of earnings season, when should I stop trading in my stocks? The day before the announcement, the week before? Well, a lot to unpack there as well, Firepower. We, of course, have discussed many times in the past how it's a bit of a crapshoot to trade during earnings season. So maybe some interesting thoughts there. So, Matt, if you have any thoughts here for our listener, Firepower, A. And then B, I know you're big on the prognostication train. What are your thoughts on our audience's results of our poll? And do you concur, sir?
Yeah, so we do. I'll answer the question on earnings season first. We do quite a bit of back testing around earnings season. Should you avoid it? Should you not avoid it? So what we're finding in call or just selling calls, for example, how much that adds, you should avoid it. So, and what we are testing in our back tester is just getting out the day before, but not entering into trades for 20 days before that. So that's kind of our go-to testing. So, you could get out anytime up until the last minute, but you don't want to start entering trades, too close. If you're, like let's say you have a 30 or 60 day call selling program that you're looking at, you don't want to enter them too close to earnings, and you want to get out. At least a lot of our back testing is you want to get out the day before. About the election, definitely COVID. But I was wondering about getting a Supreme Court justice in there right under the wire, and how that went very quickly. I wonder if that had something to do with, I think the American public wants to make it as, I don't know if fair is right, but wants to try to balance, doesn't want one party to get too much power. And, I wonder if that had a little bit to do with the performance. No one really talks about that, but I wanted to throw that out there. But I think definitely COVID hurt Trump. People are pissed off, and that's not. And he had it to lose, in my opinion. I mean, you don't often lose as an incumbent. Only two, I think, in a century have lost. But so much going on again in the macroeconomic world that was out there, against Trump. So that's my 2 cents on it, Mark.
Yeah, that's an interesting thought. I'm kind of wondering the same thing myself. So much of those social issues that are the meat and potatoes of both parties, once Supreme Court justice, a lot of that boils down to the Supreme Court seat. Once that was decided, maybe some of the folks who maybe would have been a little bit more motivated to keep Trump around if he hadn't gotten his Supreme Court pick in, maybe they say, hey, we got to keep this guy around to get another seat on. He got 3 seats in one term. That's almost unprecedented. So maybe they thought, hey, we got our guy. He's good on the social issues. Maybe we don't need him. So maybe you're right. Maybe that took some of the steam. Even though he still had a ridiculous number of votes, I think, more than any other candidate outside of Biden in history. So interesting stuff afoot. Mr. Meatball, or I should say Mr. Rocklobster, I'm not sure. I think you had a chance to weigh in on this, but if you have any thoughts on this surprising, maybe not surprising, a poll result, and then B, if you have anything to add on Matt's thoughts about maybe when to keep the powder dry during earnings season, have at it, sir.
I think the COVID hurt him bad. I don't know what Biden ran on but I think he just ran on that. I don't think every time he talked at all, he said there was 200 and something thousand people dying and there's going to be more dying. So I think that's pretty much what he ran on. So I think it hurt. I think it hurt quite a bit. The possibility of some people that are more conservative and then they got their justice, so they didn't need Donald. And, Donald is abrasive, and they're like, I don't want the abrasive guy, but I got my justices. That's certainly possible as well. So I think those are all reasonable. Definitely reasonable issues. I don't think a president's loss on the stock market was higher than when he started. I'd have to look, but I don't think that's happened. As far as earnings, I think the run up to earnings is, especially for like stocks that people like, kind of the FOMO type names, is definitely a interesting thing. But unless I can buy really cheap ball on something, I generally don't hold like option positions through earnings. Obviously, if you're a long-term investor, you'll hold stock through earnings. For years and years and years. But option positions, they have finite lifetimes. So you have to be careful on what you want to do through earnings with them. So that's what I would say is that's a problem there as far as that goes.
What's not a problem, though, is my crystal ball prediction. So let's get to it.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt to wrestle with the capricious mistress that is the volatility gods out there. And, they are fickle. But perhaps not that fickle this week because we were able to nail them down. At least I was. I can't speak for the Rock Lobster. He was not able to. But coming into this segment, we had VIX just ticked down. But at the start of the segment, VIX cash was at a 23.75. And what was my oh yeah, that's right, 23.75. Exactly a bullseye. Spikes was at a 23.81. So 0.06 away. So I hate to say it, that might be a winner chicken dinner, aka a bullseye. Mr. Paul, who was our Matrix hot seat guest last week, he was at a 23 even. So he wasn't that far away. He was the next closest, but still close only counts horseshoes and hand grenades. And the Rock Lobster, I hate to say, was feeling the fade at about 22.5. So I need a little buzzer. I need a little bell to ring here so we could declare a bullseye. Bullseyes are rare in the year of our Lord 2020, so we have to celebrate them when they exist. So 23.75, pretty much on the button to the decimal point. That doesn't happen very often at all. So that's a fun one. I'm going to take that little victory lap out there. And that means I get to choose who goes first. And you know what? I'm going to make it easier for you guys. I'm going to buy you guys a little bit of time. And I will go first. How's that? I'm not afraid to go first. Let the Rock Lobster try to scum me. I know he's going to. But you know what? Doesn't help him. He still doesn't win. All right. So let's see. We're at about 23.75 exactly. We've got some interesting stuff afoot out there on the week. I'm going to come in this time next week. I'm going to say a little bit lower, but not a ton. I'm going to say 22.75, so pretty much exactly a point below where I am this week, which, by the way, in case I forgot to mention, Mr. Rock Lobster, was a bullseye. And now, Mr. Matt, you get to go next because Andrew is last. Have at it, Mr. Matt.
So I look at the direction of implied volatility, the contango in the SPY, and then the forward volatility relationships, all looking very bullish for the market. So I think it's going to be down pretty precipitously. 22.25.
Oh, half a point more to the downside there. 22.25 for Mr. Matt. So Mr. Rock Lobster, if past his prologue, you're going to come in and be what, 22.74? Is that what you're feeling?
You know, all I know is I don't know what VIX you're looking at when the crystal ball. So is it the beginning of the show at the top of the hour, or is it actually when we're doing the crystal ball segment? Because I'm looking at a 23.15 right now, 23.15 VIX, which means I'm 65 basis points away, and you are, what did you have, 75? So you're more like 5 ticks better than me on this one.
And where would you say Spikes is at this moment?
I'm looking at Spikes as
23.78, perhaps, just ticked even closer to my prognostication. Is that what you wanted to say?
23.73. Well,
I'm just putting it out there, you know, just saying.
I hear that. All I know is VIX is running on its way to run below 23.
Pick your index. I'm crushing it either one. I know you got the umbrage, but you got to deal with it. What's your prognostication for next week, sir?
All right. What did Matt say? I think we'll set a vol low. So, but lower than what everybody else said. So 22. 22
even. I thought you were going to say 22.24 on Matt and scum him to the downside. So there we go. We got a consensus to the downside. A little bit of a range out there as well, listeners. Mr. Rock Lobster on the downside yet again at 22. 22.25 for Matt on his prognostication. And me at, pay attention to that one, 22.75. All right. Unfortunately, that music means, once again, and, you know, even if the cash does move around, even if he was confused by it, there's no confusion when it comes to the spikes. So there we go. Bullseye. Yet again. But since he's holding down the old MIAX hot seat this week, did an able job in the guest host spot. Mr. Matt, we'll start with you, sir. If folks are intrigued, they obviously have a lot of questions about earnings vol. They want to hit you up on that. Maybe they want to try out the back tester or all the other cool stuff you guys have cooking over there in ORATS land. Where should they go? What should they do, sir?
Yeah, come on over to orats.com. We got a lot going on, a lot of data, a lot of people interested. We're seeing a big uptick in people coming to the site and getting data and using our back tester. Our scanners getting popular. We're working on auto trading strategies so you could back test and then see how they do. We're making a paper trading account to where you could see and see how your trades have done. So there's a lot going on over at ORATS. Come on over if you haven't been there in a while, Mark.
Check it out. A lot of stuff cooking over there at ORATS, and I'm glad to see you're getting your earnings data out to more people, Matt. I saw you putting it out to Market Watch and stuff. They needed some help with their earnings data. They were quoting some weird stuff. I said, you got to talk to Matt. He's got the good data, so check his stuff out over there. ORATS.com, ORATS.com is the place to go. You know where to go for all things spikes, including the vol product that gives you the victories out here this week. MIAXoptions.com/spikes. is the place to go for all that data, the 2-minute video, the all the charts and historical stuff, the press releases, when the futures are back, you'll know the second it's live right there on that page. Of course, even a link to a cool show called Volatility Views. What more could you ask for out there from a volatility destination? MIAXoptions.com/spikes. And Mr. Rock Lobster, if folks are intrigued, they want to see how you consistently lose the crystal ball week after week. Where should they go? What should they do?
Well, I guess, if you want to learn how to consistently lose in the crystal ball, but get close enough for it to matter, come on over to optionpit.com, where you can put your ball learning on and see how that goes. But I'm still going to give it to the 23 guy. I'm just saying. I'm looking at the 23-13.
In these cases where things are close, the index that actually sponsors the show gets to be the deciding factor. And that's the one. So we're going with spikes. There we go. Crass capitalism speaking at its finest. There we go. All right, so Mr. Rock Lobster, where should they go, sir?
Go to optionpit.com, go to our memberships page, and look at all the goodies that you can find.
Lots of goodies over there for you to find. And speaking of goodies, he did an able job, Mr. Rock Lobster, holding down the newly christened Matrix Executions hot seat. Want to know more about Matrix Executions? They are an agency-only broker-dealer focused on BEX execution and trading workflow automation. A tech-driven firm, Matrix was founded by options innovators with decades of experience in cutting-edge execution solutions. With unique industry expertise and state-of-the-art assets, Matrix delivers exceptional technology and effective results to demanding institutional professionals. They're headquartered right here in Chi-Town. If you want to learn more, the place to go, matrixexecutions.com. And on behalf of our new friends over there in Matrix Land, and of course our friends over there in MIAX Land, and Matt, and the Rock Lobster, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions. Keep them coming. And we'll see you back here next week for another Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.